actually don't do much with the options on Intel, but just from doing this analysis with you, you don't understand. I learn a lot when I'm going through things with you in class. I'll go through something, I'll be like, ooh, like Howard brought up NBIS, and I'm like, ooh, that looks interesting. That looks kind of fun. And Intel, just us, and again, it's totally on you. You all did this, but when you asked me about what conditions would I feel comfortable selling the cash secure put on Intel, I looked at that and I said that's actually not a bad approach, right? If you believe Intel is going to benefit from whatever's happening behind the scenes with the Trump administration, then selling the cash secure put is a way to put your money where your mouth is. But just be mindful. You want to practice sort of playing out every scenario, making sure you can live with that. And then once you've done that, and then you make your move, kind of sit back and try to relax. Don't freak out every time the stock wiggles on you because there's a lot of head fakes that happen in financial markets. You have this whole industry of these media outlets that will talk incessantly about every single thing that happens in the market every day, and what it kind of does is it's an economy built around just this activity, all this chatter around. Well, the market went down by 2% today. What do you think that means? Maybe it meant nothing, but we all sort of seek something to sort of imagine what it could mean. Or what if it keeps going down, right? That was what could this be the catalyst that drives the market down, right? But then tomorrow, if the market shoots up, they'll have a whole different conversation. And I would encourage you to pay attention to the conversations, but don't believe that every one of these conversations means you have to go do something or that there's something to freak out about. It's just people talking sometimes. They talk about important stuff. They can tell you a lot about dynamics of the market, things to consider. So I spend a lot of my headspace in what I call like the fifth dimension. And the fifth dimension is where you're looking at all the possibilities. Well, what if this means this, or what if they do that, or what if the Fed lowers interest rates, or what if they don't, or what if this company does actually make this move, or what if AI is overexpanded, but what if it's not, right? So you're going through all these different outcomes, and then at some point you just kind of say, okay, which one do I feel I want to invest in? Where do I feel most comfortable putting my capital? Because you can't be everywhere at once, but your mind can kind of go into a lot of different places. So it's kind of like quantum investing, if you will. That's what quantum mechanics is to me. It's like being in multiple places at once mentally. All right. Last question. Okay. Kamita's asked, are you still going to go over margin? Okay. So I think we listen. Maybe next time might be better. However, let's talk about margin very quickly so we can kind of just understand the dynamics of it. So basically, when you have margin, that is where they tell you how much of the investment you have to put up in order to make the investment. With Robinhood, if you want margin, you want to sign up for Robinhood Gold. And when you get Robinhood Gold, they'll give you margin, which gives you extra money to invest. So you'll have a couple of different numbers. You'll have your total investment. That'll be one number, but then they'll tell you your buying power, which is how much stock you can actually control. The control means you own some, and then some of its own, some of it is due to the debt that you take on. So what margin lets me do is if I have say 50% margin, then I have to put up half the investment. If I have 40% margin, then I have to put up 60% of the investment, that kind of thing, right? And the amount of margin that they give me and the amount of that I have to put up is going to vary based on the risk level of the asset. So some assets they won't give you any margin, they won't loan you anything. But some safe assets, like if I go buy a bunch of Apple or a bunch of ExxonMobil, I can borrow lots of money to control a lot of ExxonMobil stock.